Grand Portage Resources' Herbert Gold Project in southeast Alaska highlights increased gold resource, indicated and inferred, of 860,000 ounces, in excess of 10 grams per ton gold. Expansion drilling is planned on the Herbert Gold property for the summer of 2019. Grand Portage Resources trading symbols are GPG on the TSX Venture, GPTRF on the OTCQB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor who you can find online at stevesaretsky.com. Welcome back to the show, Steve.
Thanks for having me on. Always a pleasure.
Steve, we keep hearing rumors that people in Hong Kong with Canadian passports will move here and boost the price of real estate. Are you hearing or seeing anything about that?
Yeah, again, my conviction is that certainly a logical thesis, but as of right now, it's more noise than anything. It's a lot of, I think, hype as, the next sort of China 2.0 capital exodus that's going to drive prices up, and I just don't think it's going to be to that magnitude. As of right now, I think that, I haven't really seen anything, discussing with my colleagues. They're not really noticing anything yet. So I think right now, to me, it seems to be more hype than actual facts.
Could some of those people already own Vancouver real estate so you wouldn't notice if they moved back?
Yeah, I mean, I think there's obviously, pretty strong ties to, Hong Kong and Vancouver, and a lot of that exodus was sort of back, set up in the late 90s. So I think that's certainly part of it. And obviously, again, is 300,000 Canadians or, these wealthy individuals in Hong Kong, they have options. I mean, there's so many places to put your money. And I think that, I think a lot of these people are aware of what's happening in the market and whatnot. So, I think right now, certainly plausible that something will happen. But as of right now, it's more just talk.
If you had a Canadian passport, you wouldn't be subject to the foreign buyer tax, would you?
No, you wouldn't be subject to the foreign buyer's tax. I mean, it depends on the usage of the actual home. If it's occupied, rented, or whatever, they maybe be subject to the speculation tax, potentially. So that might be a deterrent for some, but, unless you're sort of buying it and renting it out at least 6 months of the year. But, if you have a Canadian passport, no foreign buyer tax.
What's the shakeout been from the speculation tax?
The shakeout in terms of sort of what's happening in the market?
Yeah. Has it had much of an impact?
I think it's put a lot of, bigger homes, on the west side. I think it's put some of those houses into the rental pool, and that's actually driven some of the rent prices down. Or at least given renters more options. So I think the rental market has eased up a bit as a result. And, I think rent prices have actually come down, for houses and condos. It's kind of been flat for the last year. So, I would say, I don't know if it's necessarily pushed the, price of homes down. There's certainly been some people selling as a result of the tax, and I'm sure it's discouraged people from buying, but I think more than anything, what I see is it seems to me like it's helped the rental market out a little bit.
What's the latest on prices and sales in the Vancouver area?
Sales have picked up for sure. No question about that. I think that a lot of that has to do with near 100 basis point drop in mortgage rates. I think that's sort of provided a floor for housing, right now. When everybody's employed and the credit is still easily available in Canada at 2.69% on a 5-year fix, people are happy to go out and borrow that money. It really comes down to confidence. And I think when people have jobs, and money's cheap, they're typically pretty confident to go and borrow that money. So, I think right now we're seeing an uptick in sales as a result, and prices to me feel like they're kind of just moving sideways at this point. Again, that could certainly change, but as of right now, it seems to me like, we've seen a noticeable uptick in activity, and, prices seem to be basically moving sideways.
Could interest rates be close to bottoming in here?
I mean, sure, there's a huge divided camp on where bond yields go. I personally am in the camp that yields are going to keep falling. So, yeah, that's kind of my camp, because I think that the Bank of Canada is going to be cutting rates here soon, probably by October. And I think that, like every other central bank, regardless of what the data says, or regardless of the amount of household debt and how high house prices are, is basically central banks are in a race to basically, devalue their currencies, and that's kind of what's happening right now. So we've seen, Aussie central banks cut rates 50 basis points, New Zealand cut rates 50 beeps. The Fed is probably getting a cut again here in September. So, that's kind of just the world that we are in right now. You've seen the tweeter-in-chief, Trump, calling for a 100 basis point cut in rates, and then the restarting of quantitative easing. So, not that that's going to happen, but, you can kind of just see where this is going.
We'll have more with Steve Saretsky right after this.
Media recognition from Bloomberg, Reuters, recycling trade publications. Patented process for 100% recovery of critical metals, including cobalt, lithium, nickel, manganese, aluminum. American Manganese is focused on recycling lithium-ion batteries for electric vehicles. American Manganese trades on the TSX Venture, AMY, the US, AMYZF, and Frankfurt 2AM. For more information, visit AmericanManganeseInc.com or phone me, Larry Ray, at 778-574-4444.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia and the Yukon, trading on the TSX Venture Exchange, symbol ABN, and the OTCQB, symbol ABNAF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Welcome back. We're speaking with Steve Saretsky. Steve, could a black swan event change the course for interest rates?
Yeah, I mean, sure, possibly. There's always going to be black swans that you can't predict, but, yeah, I think right now there's just sort of a lot of political global turmoil, and, look at, Germany is basically in a recession, Italy's in a recession, China's slowing, so there's a lot of stuff that's happening right now. Central banks are losing their impetus, but, lowering rates, they don't really have much more room to go. And so we're going to start to look for alternatives. And some of those alternatives that are being discussed is modern monetary theory, MMT. And, I don't know when that's going to get implemented, if it gets implemented, but there's certainly people coming out of the woodworks talking about these types of programs are going to have to be implemented at some point to offset, future recessions. And, you could certainly argue if you go down that route that could definitely be inflationary, and maybe that's when you start to get a rise up in yields. But, given the amount of leverage that's in the global economy, you just simply can't have rates normalized. So I don't really know what the exit strategy is. It's out of my pay grade, but I'm certainly watching it, and from a fascination standpoint, it's going to be very interesting to see how everything shapes up.
If interest rates do continue to drop, are banks likely to become more liberal in their lending?
Well, I mean, I think that there's certainly the argument out there that there's more and more papers now coming out, and even some of these guys that were generally proponents of lowering or zero interest rates are coming out and saying, well, maybe zero and negative interest rates actually impair bank lending. Obviously, flat to inverted yield curves erode bank margins, profitability, and so it really ultimately just discourages lending. And so I think that some of these people are starting to come around to that conclusion. And so yeah, I think that's kind of, it seems to me like the path that we're going down. I mean, you can certainly look at Europe and Japan as prime examples of having basically zero negative interest rates for the past 10 to 20 years, and there's been almost no stimulus as a result of that. So I actually think it almost works in reverse.
Well, if very low or negative interest rates help, Japan wouldn't have been in a recession for the last 30 years.
Yeah, I just think that they're kind of, they're stuck in their models, and what's the alternative? They feel, we can't raise rates, so what do we do? I don't know. They just keep cutting and try to hope for different results, which I think is the definition of insanity. But and that's why more and more programs like MMT is being discussed, because it's like, well, we gotta shake things up and try something new, because clearly this isn't working. And so there's a lot of paths that you can go down. I know the IMF has talked about, deeper negative interest rates and banning cash, so you can actually enforce, people to basically spend money, which again seems kind of like a lunatic idea, but these are some of the discussions that are happening right now.
Mm-hmm. Yes, we've seen in Europe where you're only allowed to take, I think, 750 or 775 euros out of a banking machine. Otherwise, you need special permission.
Yeah, I don't know. You look at, the ECB, they're talking about cutting rates again, so they're going to go to probably negative 40 basis points with their overnight rate. And it's like, is that really going to stimulate things? You go from negative 40, then what? Negative 60, negative 80, negative 1. It's like, at some point, someone's going to have to clue in that it isn't really working.
Well, how are banks supposed to make any money with negative interest rates?
Well, that's the thing. I think they're all coming out, and certainly look at the performance of European banks is pretty atrocious. You're seeing more and more, headlines coming out talking about, negative yielding mortgage bonds. Basically, the advertised rate is, I think it was Denmark. They're offering like a negative 0.5 mortgage rate, but then, of course they tack on fees because they're not going to lend you money for free. But they tack on rates, so they got mortgage rates at basically 2%. I don't know. I don't really know what the end game is, to be honest.
We'll have more with Steve Saretsky right after this.
Cypress Development Corp. is developing a world-class lithium resource in the heart of Clayton Valley, Nevada. The size of the resource makes the Clayton Valley project a premier asset with the potential to impact the future of lithium supply. Cypress Development Corp. trades on the TSX Venture Exchange, symbol CYP, the OTCQB, symbol CYDVF, and on Frankfurt, symbol C1Z1. For more information, please visit our website, cypressdevelopmentcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're speaking with Steve Saretsky. Steve, if interest rates go higher or lower, is the effect on the housing bubbles likely to be the same?
I think that we're going to be pushing on a string here. Personally, I just don't know how stimulative rates are going to be. You already have 5-year fixed mortgage rates at 2.69. Again, I think those rates can go lower. Maybe they get down to sort of the 2015 lows, 2.2, 2.3. You could argue maybe they even get down to like 2%. But at some point, that's really still not a whole lot of movement, 60 basis points. Particularly if you have a recession or if there's job layoffs, then that's not going to be overly stimulative.
What are the differences in building costs for a condo versus a detached home versus a luxury home?
The luxury housing is definitely more expensive to build. It really just depends. Cost is kind of subjective. It just depends on the quality that you want to build. So you could build a home anywhere from 150 a square foot to 900 a square foot. Just depends on the quality.
Are you gearing up for a potentially busy fall?
I can, truthfully say that July and August have been, significantly busier months. The first 6 months of Greater Vancouver real estate, housing sales was the slowest start we had in 20 years. So, hard to be worse than that. But yeah, certainly we've noticed a significant bounce in July and August. Some of that might have been just pent up demand. People delaying their purchases to the first half of the year. So, given the last couple months that we're on, I suspect that, September, October should be relatively, I don't know if I'd call it necessarily busy, but from a historical context, they'll probably be in line with our historical averages. I think, certainly encouraging news for people that are in the industry. We'll have to see how that, if it's, sustainable.
Steve, thank you so much for chatting with us.
Thanks again, Jim. My pleasure.
My guest has been Steve Saretsky, a Vancouver-based realtor who you can find online at stevesaretsky.com. If you have any questions for Steve or any of our other guests, you can send them to info@housestreet.com. Our YouTube channel is Talk Digital Network. Find us on Twitter @HowStreet. I'm Jim Goddard. Thank you for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.